Hey traders, welcome to Charts and Coffee. Hope everyone's having a great Thursday morning. We've got the aftermath of initial claims right now, but you can see since about 4 a.m., that's the end of the Asian session, that's the Asian session close, we are seeing a lot of resilience since that 4 a.m. point. And then if we fast forward to where we are right now, a little bit of volatility going into 7 a.m. What does that tell you? The early look at the US was a little bearish. You see that? So remember, there's a whole journey. There's an entire journey to the open. And ultimately what we want to remember is as we're looking at 9 a.m., we're looking at what happened at 4. How did the Asian session close? Then there's that 3-hour lull between 4 a.m. and 7 before that first cup of coffee in New York. And you'll see that there's going to be an increase in volume and volatility at 7. And then we see what we've inherited come 9 a.m. So it's not always about looking way deep into the pre-market and looking at what Europe and the UK did, although those highs and lows are always going to be something we can keep an eye on. But you can see the sentiment and the trends evolve from 4 a.m. on. And that's ultimately the proximity we have into the open. Now, in the most general sense, we are just barely above Wednesday's close. You can see that there with that PSC, previous session close. What was the 4 p.m. Eastern cash close, and where are we in relation to that? That is the easiest sentiment read. That is the easiest line in the sand you can put to understand what's sentiment. Rag, when you keep saying sentiment, what does that even mean? Are the broadest group of market participants bullish, therefore looking for support, looking for higher highs, looking for strength? Or are the broadest group of market participants bearish, which would be the opposite, looking for resistance to hold, looking for short setups? And that's where we want to start. Now, there's other sentiment reads we can take throughout the morning, everything from an anchored VWAP to clearing ranges to initial balance. And all of these, don't look at them as what's the most important. Think of them as being incremental to determining follow through. So for example, yesterday, I'll give you a great example. Yesterday, we set up an SPY trade, and a shout out to Twitchy from our Sector Secrets Mastery Room. One of the things that, remember, he told me after yesterday's close is he 4x'd, not to be confused with Forex, but he 4x'd, quadrupled his long calls that we set up in the morning, meaning as incrementally each one of these sentiment reads kept being broken, there's no reason to overmanage. There's no reason to think that today was that day, meaning Wednesday, was not going to be potentially a grinding higher kind of day. So keep these sentiment reads in mind, because they're not only going to help you at the bell, they're going to help you throughout the day to manage positions that you might have taken early in the morning. All right, so with that being said, let's jump on over to what we have going on. We are, like I said, opening just right around the previous session close. NAS is just a bit below. ES is a bit above. And this does make for a tricky morning, because what that then means is that between 9:30 and 10, we're going to see whether or not we're going to have price established above that sentiment read, that line in the sand, that previous session close, or below. So these kinds of opens are a little trickier. Keep that in mind. We don't have a clear bullish or bearish sentiment. The other thing I'm going to keep in mind is the economic calendar. So we already have initial claims out there. Let's jump on over to the calendar. We already have initial claims already out there. And what else are we anticipating? Well, we got building permits that came out. Housing starts. Now, you might say, Rog, those were misses. Yes, for the most part, those misses should be, although those are not important employment or inflation metrics. But those two releases should be more bullish than bearish in an environment where the Federal Reserve is monitoring what their current monetary policy track is doing to the economy. Now, of course, their focus is primarily employment. Their focus is primarily inflation. But remember, housing starts will map eventually to those metrics, mainly employment. So those would consider those would be considered when we see negative data, disappointing data. It is a little surprising at the moment to see that equities are not responding a little bit more bullishly to quote unquote bad news. But look, it's not a matter of a knee-jerk reaction. One of my favorite lessons in martial arts, which I've been studying on and off since I was a child, and trading is this: do not expect an anatomical response. I remember my first sensei told me, Raghee, I'm going to teach you all these strikes, but don't expect your opponent to do something just because you've thrown a certain kind of strike. And the same thing here too. Don't expect that just because I would anticipate disappointing data to be bullish, that it has to be, right? We have to still monitor what's happening on our price charts. All right, that being said, let's go ahead and jump into the questions and take a peek at what we are doing right now. And first question, NEM, sure. So I am Group. NEM is definitely something we've had in the top tier outlook in terms of our weekly newsletter. And NEM is tethered to really two larger narratives. So we talk about the word alignment a lot. What does that mean? When I'm looking at an individual stock, it doesn't move necessarily on an island or because of itself. It's going to be moving because of other larger factors, in this case, gold. So if I'm bullish in gold, that would be something to keep an eye on. And then if gold has a bullish sentiment, bullish trend, then I could expect more strength out of GDX. And then we finally get to NEM, which is the number one weighted stock within GDX, which are the gold miners. Now, ultimately, when I'm looking at NEM, I agree. It's got a trend. Take a look at the two rows of colors at the bottom of my screen. When I see the bottom row green, I know that I've got a trend. And you can see we've been in and out of the trend on NEM for some time. But NEM's follow through, right? Not just a fill. NEM's follow through is very much going to be reliant on that consistent strength on gold futures, GC and GDX. Now, can NEM move on its own? Yes, but let's not try to focus on outliers, right? There's one way of saying, hey, what's the stock today? But we're looking at what could be the follow through for days, if not weeks, if we're swing traders, and what could be the follow through today if we're day trading. Ultimately, the main goal is to find alignment, because that's where that follow through is going to be consistent for days, if not weeks. And that's the difference between, hey, what's the stock of the day, what's being talked about today versus what has that consistent alignment and trend. So thanks for the question on NEM. I like the NEM chart on the daily. I like the NEM chart, not as much on the hourly. And what's the big difference, Rog? Why the difference? Isn't that splitting hairs? Here's the difference. Short-term time frames, short-term time horizon. What's the lifespan, life cycle of the trade? And then if I take a look at the daily, right, my life cycle of the trade is going to be longer because I'm only getting one new candle per day. It takes longer for a trend to be established, and conceivably it's going to take longer for that trend to be broken as well. So the lifespan, the life cycle of a daily time frame is going to be days to weeks, as opposed to a handful of days for NEM. I'll favor the daily time frame because it has the trend. So I'll favor that longer term follow through. All right, next up is, let's see. Paul says, I've gone from trading TQQQ, UPRO 3X, and in the last year moved to trading QLD, SSO. Now I find that I've returned to QQQ, SPY. Hard lesson learned. Paul, I'll tell you, there's two ways we learn, right? And I think for most of us, I'd say 99% of us, it's just going to be getting our hands in it. And that's and thank you for sharing that. That's a very normal part of trading, right? There's this idea, there's that idea. Which is it that I want to pursue? Which one is going to yield the best results? And we're never going to know that in a day. We're never going to know that in a week. We're going to know that after sometimes dozens and dozens and dozens of trades over many, many months. And then we come back and say, oh, that's what works. So congratulations. That's the trading journey. And yeah, you know me, even though there are leverage products out there, I prefer the liquidity and the stability and the correlation that QQQ has to NASDAQ futures and SPY has to the ES. So, there'll be times where you might look at those leverage products again, right? But I'm with you, and thanks for sharing that. All right, what about Microsoft? So again, thank you for the specificity on the time frame group. Which one do I like? I like the 1 hour here. I'm with you. So the 1 hour, when we have a trend, the 1 hour tells us really simply that there are more levels from which I can be a buyer. What does that mean? Well, ultimately, what that helps. Okay. Oh, thanks, bot. You sent out the recap video. Oh, the recap video didn't work. Oh, weird. Okay. So if I have, oh, by the way, so what am I looking at? I'm looking at my Sector Secrets Mastery Room, where at the end of each day, I send out a short video. I try to keep it short about what were all the trades that we did in the mastery. So a lot of times traders will say, Rag, we did a lot in the mastery, whether that be day trading, swing trading, short-term swing trading, maybe even our position portfolio. What ultimately did we do and what prices did you get in and get out at? And we send that recap out every day to members, usually right around the bell. Yesterday, I sent it out a little early. So yeah, thanks, bot. I didn't realize that it was not cooperating. Anyway, we get that out every single day. Next up is, what do I want to do with Microsoft? I can look at a mean reversion, so I won't rule that out on the 1 hour. So because I have the trend, once again, comparing a daily time frame to the 1 hour, that 1 hour might give us some more opportunity. All right, next up, Green Eggs and Ham asks, good morning, good morning. As for macro, if the rate cut is expected later this year, how would the financial sector typically relate to decreasing rates? Loans make less money. There's been overall a pretty good move higher in the XLF ETF. It's hard to say that lower rates are somehow the undoing of this regional bank and financial sector. If you look at KRE and XLF, they've been stable. So let's remember that in terms of expectations for lower rates, they were even greater at the end of Q4 and throughout Q1. So if I look back at a time where expectations for rate cuts were more rate cuts and higher expectation, and I look at the response in XLF, I'd have to say, I want to continue to be a buyer. Green Eggs and Ham, absolutely want to continue to be a buyer. All right, Daniel asks, what are my slow stochastic settings? Two things. One, Daniel, I do not have a slow stochastic at the bottom of this screen. While it looks a lot like my traditional slow stow that I've used forever, this is actually a completely different calculation. However, when I am using a slow stochastic, first of all, it is a slow stochastic, not a regular stochastic. And this is what I've tested and used for over 25 years. Use an 80 over bought, 20 over sold, set the K at 21, and set the D at 3. And that is what I've been using for a while. Hey there, Twitchy. I was just bragging on you and your what was it? You did a quad? You did a quad on that SPY yesterday? Yeah, I was just bragging on you a bit ago. All right, very cool. Question from our essentials room. Yeah, Jana, yeah, I was mentioning earlier, 4 p.m. cash close. Yes, if you check the replay also, I went into a little bit of detail, but yes, 4 p.m. cash close is what the PSC or the previous session close is. All right, how about the 1 hour chart of Amazon? So we're going to do the same process. Let's compare the daily to the 1 hour, and you'll see the daily wins out here. The daily will win out. And that means that I'm going to be looking for opportunities. Well, actually, no, I take that back. The daily won't win out. But because I do have green candles, green top tier candles on the daily, I will look for the daily buys. But interestingly enough, they'll be at a similar level, whether that be, say, an oversold buy on the 1 hour Amazon, or whether that be a daily buy on the daily price movement range, they're going to be looking at the same zone. Now, here's where I would say one thing to do for those of you that took the top tier pro class, or for those of you that are just getting used to my candles, I will not take a swing entry long if those candles are red. And just as I won't take a short or long put entry if those candles are green. So that candle color has a lot to do with what validates my getting long calls or long puts in the 1 hour or the daily. It doesn't apply to the intraday as much, as strongly, but it is a hard and fast rule for swing trades when I'm using these top tier pro candles. So the candle color does give me a lot of insight. Really simple to read insight as to whether I'm bullish neutral, which is yellow, or bearish, which of course is green, red. All right. Next up is, let's see. Do I use Keltner channels or consider average true range in analysis? So Andrew, the easy answer is no, but then the best answer is, well, what do I use instead? So if I'm, the question is, what are the Keltner channels helping me with, right? If I were using them, or if you're using them, Andrew, what are they helping you with? And most things that we're looking at on our chart, if you really break things down, you'll say, oh my gosh, it's kind of I wish I had a V8 moment. It's just support and resistance, right? We all are using different tools, different processes, different metrics and formulas to determine where support is, right? So what is support? Support is a floor. Support is buying. Support is demand. And where resistance is, right? Resistance is a ceiling. Resistance is sellers. Resistance is supply. Whatever wording you use, how we come upon those things are going to vary from trader to trader, right? So I have support and resistance automated with Darvis. I have support and resistance automated with my hourly price movement ranges and my daily price movement ranges. And I have support and resistance via volume levels, like a VWAP. So I don't use Keltner channels. There's other ways I'll find support and resistance. The average true range is a different conversation. So here's how I will explain that. No, I don't use it. However, what do I use instead? I go right back to my volatility measuring stick on the chart, hourly price movement ranges and daily price movement ranges. So what I'm looking at is a more historical look back at volatility, hour to hour or day to day. So think about this. What's the biggest difference in the formula in the most basic sense? Average true range. Think about your setting on ATR. I don't know what you're using, but average I've seen 7, maybe 14, sometimes 21. So that means that your average true range is looking at the last 7, 14, or 21 candles. And if we're coming out of a fairly quiet period, like we tend to do before a major economic event or before the bell, they're skewed. They're not really reflective of the increase that we all know is going to happen at the bell. And so I don't like average true range because sometimes its look back is so short that I'm not really looking at what could potentially happen from 9 to 10 a.m. every morning, or on the daily time frame from a price movement range. So the calculations are very different. What they seek to do is the same, right? Have some sort of support and resistance in terms of volatility, but rather than such a short look back. I mean, 7 or 14 5-minute candles is not necessarily going to prepare us for the volatility of the open. So the one thing that the daily price movement range and the hourly price movement range does, there's many things that are different, but probably the most glaring difference is time. These are very specific to time. These are very specific to the day of the week, not an average of the candles that preceded whatever's happening right now. All right. Next up, what about JP Morgan? As far as the daily, yes. Daily price. Now, look, we don't have a trend here, and I'd rather have a trend in one of the stocks in XLF, but I would definitely be looking for the long side. What about Baidu? All right, here. Kristen V, Baidu. Keep an eye on the support at about 108, 107.90. We have 2 Darvis levels sitting there, but be careful here. We don't have a trend. We're still sitting below the 200. And take a look at every time price tried to get to the 200. Yeah, not really super helpful there in terms of follow through. But if we get above that, yeah, we're really moving and grooving. All right, last question of the morning. How do we get the top tier system indicators? Christina, there's 2 ways to do it, I believe. Actually, maybe one. Get a call to the office. This was part of our last class that we wrapped up in early this month, late last month. And that's the top tier pro class. So give them a call And I believe you'll get not only the class, but the indicator pack as well. And that class includes not just the classroom session, but the bonus and live sessions that come with it. So yeah, just give the office a call. I believe that class is still available. And of course, the indicator set comes with it. All right, gang, that's a wrap. That's a wrap. And I will see you all tomorrow, same time, same station. Be good to each other.